Hello there, so how would you like a completely passive income of $1,000 or more every single month dropping into your bank account? Everybody would like that, of course. This video today, that's exactly what I'm going to show you. I'm going to show you how a stock portfolio could be structured in such a way as to give you $1,000 per month every single month. I'll show you how much it would cost, how much it would have cost 10 years ago, how much it would cost today, and I'll also show you different mixtures, 4 different mixtures of the same portfolio, so that you can see how that can be changed depending on the mix-up of the shares, and I'll explain that to you later on in the videos. If you're new to this channel, welcome. My name's Andy, and on this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you get notified every time I release a new video. And if you enjoy this video and find it useful, please do remember to give it a thumbs up, because that helps the YouTube algorithm, which in turn helps me, and of course I do appreciate that. So without further ado, let's dive straight in. So today's video, monthly dividend portfolio, over $1,000 per month every single month. That's the goal. I'd like to start by asking this question: what is your monthly dividend goal? Let me know in the comments down below. Please do let me know, what is your monthly dividend goal? How much money would you like to earn each and every single month? Now, the reason I chose $1,000 for this particular portfolio is because I figured it was an easy number and easy for people to multiply up or down. So for example, if you want to make $2,000, just double the costs that I show at the end of this video for how much the portfolios cost. If you want to triple it and you want to have 3 times $3,000, just simply triple it. If you want $5,000, all you've got to do is times it by 5. It's hopefully, I thought $1,000, it gives you that easy way of multiplying it up or down. So the rules for picking the stocks for this portfolio: all of these stocks that I've chosen pay dividends monthly, and all of these continue to pay dividends in 2020. None have suspended their dividends. In fact, I actually picked these dividends and I got the idea for this entire video whilst creating a previous video, which is the one called Monthly Dividends Full List, basically, and it's the full list of monthly dividend stocks that have not suspended their dividend during the pandemics and lockdowns and all the issues that we've had in 2020. Of all the monthly dividend stocks I could find, the ones that had continued to pay their dividends and not suspended them, I included in a list in that video. I'll put a link up there for you. So if you click on that card, I'll put a link in the description down below as well to that video. So if you want to see the full list, which will also give you a little bit more information about the stocks I've included in this portfolio, which is just a selection of those. And obviously bear in mind, I had the benefit of 2020 hindsight, so I could choose how they performed to create a portfolio to my liking. So bear that in mind. Now, as I go through this portfolio, I will let you know which of these stocks I personally invest in, because I do invest in some of these stocks, but I don't invest in all of these stocks, so that you know. So I want full transparency on that at the beginning, so you know that. I should also let you know I am not a financial advisor, so this is not financial advice. You need to do your own due diligence before making any investments. What you do is on you, okay? Now let's move on. So the portfolio mix, it's got 2 business development companies, 1 healthcare REIT, 1 water utility company, 1 renewable energy company which does wind, solar, hydro and natural gas, 1 diversified REIT, 1 aerospace and aviation industrial, and 1 healthcare REIT. Now, interestingly, there were other options from that big list. For example, there was a telecoms company, there was even a gold and silver mine in there. So like I say, check out that previous video if you want more of a diverse mix. This is just the mix I have chosen to suit these portfolios, okay? So the first company is LTC Properties. Now, LTC Properties is a healthcare REIT. The ticker symbol is LTC. Company overview: dividend yield 6.3% as of October 2020. It's got a payout ratio of 76%, and there's some information on the screen here. As you can see at the top, LTC is a real estate investment trust investing in senior housing and healthcare properties, primarily through sale, leasebacks, mortgage financing, joint ventures, and structured finance solutions, including preferred equity and mezzanine lending. I'm not going to go through the charts or the history of the shares, because I did that in that full dividends list that I told you about earlier, that I gave you a card to earlier, and there's a link in the description down below. So the monthly dividend stocks video full list, check that out if you want to see the historic charts. I went through that briefly in there for all of these stocks and more. So if you are interested in that, just check that out. So I'm just going to quickly whiz through these. So I'm going to stop talking now and carry on. So the next one is EIFZF, that's the ticker symbol for Exchange Income Corporation. It's a diversified and disciplined acquisitions, it says, yielding dependable and growing dividends. I took that screenshot straight off their website. So they're obviously proud that they are paying dividends. Dividends are important to them, and as I said, dividends are monthly with all of these companies. And that was an aviation company, by the way. Now, the next company is Gladstone Investment. GAIN is the ticker symbol, GAIN, and it's a business development company. I've taken a little bit from their investor presentation here. Their primary equity investor, lead majority of prospective transactions, often partnering with existing management teams. They basically invest in companies. As you can see on this page here, they've got a current portfolio which is diversified across 28 companies, which is 17 states and 14 industries, with 571 million in total assets at fair value. This is also taken from their investor presentation. The key point I thought was interesting on here is their outperformance. Point number 3, outperformance compared to industry peers. GAIN has outperformed industry peers in return of equity, ROE, and return over the past 3 years. GAIN's 3-year return on equity is 12% versus industry peers of 3%, and GAIN's 3-year total return is 40% versus industry peers of 18%. The next one is Global Water Resources Inc., GWRS. As the name implies, it's a water utilities company. Now, they specifically invest in recycling water. So I'll read this to you. Global Water is a water resource management company. We provide water, wastewater, and recycled water services. Recycled water is what we produce when we treat and purify wastewater. We distribute recycled water throughout the communities we serve in its own separate system of pipes. We use recycled water for a variety of outdoor uses. Main Street Capital Corporation, ticker symbol MAIN, is also a business development company. I want to just jump in here and let you know straight off the bat, this is one of the ones that I invest in. I love this company. I bought shares in this recently. I'll put a link up there and in the description down below. I think the video is called Shares I Bought This Week, or 3 Stocks I Bought This Week, something like that. This was one of those stocks, so if you want more information about that, check that video out. But I do like this stock a lot. Again, it's a business development company, very similar to GAIN in many respects. Let's have a quick look at the presentation and we'll move on, but I'm not giving you much information on this one now. MAIN is a principal investor in private debt and equity. So in short, think of it like Dragon's Den or Shark Tank. It invests in companies, takes an equity stake, typically 14% with MAIN, of the company, as well as lending them money. So those companies, as they grow, MAIN grows with them, and then it pays out the income it makes in dividends, or a percentage of, which is currently standing at about 8%. Realty Income Corporation, ticker symbol O. It's a REIT. Everybody knows what O, a Realty Income Corporation, is, aka the monthly dividend company. This is another one that I own shares in. I've got a good size holding in this, and I've made a video of this comparing this to FRT, Federal Realty Investment Trust. I'll put a card up there to that video and a link in the description below, which goes into much more I've analysed these in much more depth. And actually, full disclosure, I do actually invest in both Realty Income Corporation and Federal Realty Investment Trust. I keep looking down there because I always forget to say the investment part of Federal Realty. I just want to say Federal Realty Trust, but it's not. It's Federal Realty Investment Trust, ticker symbol FRT in case you're interested. Anyway, let's carry on. So there you go, Realty Income. I'll read this to you quickly. Company description: Realty Income, the monthly dividend company, see they've even trademarked the name, is an S&P 500 company. For over 51 years, our investors have enjoyed monthly dividends which have steadily increased over time. The monthly dividend is supported by over 6,500 real estate properties that generate rental revenue from long-term lease agreements with commercial tenants. Realty Income was founded in 1969 and became a New York Stock Exchange listed public company in October 1994. The ticker symbol is O. STAG Industrial Inc., ticker symbol STAG. This is an industrial REIT. Full disclosure again, this is another one that I own shares in. I like this company a lot. I own a reasonable size holding in STAG as well. I believe I mentioned in one of my very first videos. If I can find it, I'll put a card below. Otherwise, watch through my backlog, you'll see a little bit of information about it, but I think I just mentioned it briefly in one of those. It's an industrial real estate, offers attractive opportunities. The key thing, and the reason I pulled this particular slide out for you, was to show where STAG benefits from the growth in e-commerce, because it owns a lot of the big sheds, the big warehouses that you see the likes of Amazon rent. STAG owns those all over America, basically. So it's benefiting from Amazon. It's essentially Amazon's landlord. How's that for you? Okay. TransAlta Renewables Inc., ticker symbol TRSWF. It's a renewable energy company doing wind, solar, hydro, and natural gas. There's a pretty picture from their investor presentation. and I pulled out just this one slide from their investor presentation because I thought that was interesting. They're exceedingly proud of their dividend yield, which you can see is much higher than the industry average for utility companies. So now, without further ado, let's get on to the portfolios. So portfolio breakdown number one, I literally, and this, I'll be honest, was purely by accident. I made a spreadsheet for all of this because I was like, I'm going to make a spreadsheet. I'm going to work out how much money it'd cost to make $1,000 per month of income if I'd have bought it 10 years ago, how much that would have grown to today and whatnot. And I had to put some figure in. So I just bought 1,000 in my spreadsheet, 1,000 shares in each company. And by sheer chance, look at this, 1,000 shares of each company bought in October 2010, so 10 years ago. It would have cost $129,910. The yield on the price paid in today's dividend income would be 9.63%. That's a monthly dividend payout of $1,042.50. The current portfolio value would be $202,520. And bear in mind, this is not reinvested. So this is purely, you put the money in, the $129,000 even, you bought $129,000 worth of these shares, 1,000 each, 10 years ago. You took the dividends, whatever they were at the time. Those dividends over time have grown, and 10 years later, now, that same portfolio is worth $202,000 and gives you a dividend income of over $1,000 per month. So that was how I did it, and I thought, well, can I make that better by tweaking it? Let's have a look what I could do. The capital gain was $72,610, or 56% over the 10-year period. So when I thought I'll tweak it, I set myself some rules. So rules for making variations. I decided I was going to make a balanced portfolio, a high capital growth portfolio, and a high yield portfolio. So let's see how I did that. So no one holding was to make up more than 25% of the portfolio. No one holding was to make up less than 5% of the entire portfolio. But please do remember, folks, these are just rules that I made up to play with. So you can and should decide on your own limits and mixes when creating any portfolio. So first, let's look at the balanced values. So this one is balanced at start. So I've put the ticker symbols at the top there. You can see on the pie chart, they all had 12.5%. So each one was 1/8 of the investment pot, which meant that each one was approximately $15,600 worth of shares bought in October 2010. So the cost would have been $125,000. So already I've saved $4,000. I'm going to save more in a minute. You watch the later portfolios. This is my balanced one. So the yield on the price paid is now 9.6%. The monthly dividend payout is now $1,000. The current portfolio value, $191,000 basically, with a capital gain of $66,000 or 53%. So now let's look at the optimized for capital growth portfolio. So with this one, you can see I made Maine my biggest holding at 25%. I made Realty Income my second biggest holding at 20%. I then made the water company, Global Water Resources, the third biggest holding at 15%. And then the others were all slightly smaller, with STAG getting 10% and so on down, as you can see on the graph there. So this was weighted for high growth. And again, bought in October 2010. The cost would have been $119,985. So I've saved a lot of money here. We're now $10,000 cheaper than just buying 1,000 shares of each. The yield on the price paid now would be 10%, which is obviously even better. The monthly dividend payout in October would still be $1,000. So you're still getting your $1,000 back, but you had to put less in at the start. The current portfolio value would be $196,000. And the capital gain on that would have been $76,000 or 64%, which I don't think is too shabby. Now let's see if we can optimize it for high yield. So if I was to optimize it for high yield, I still kept Maine as my biggest holding, but this time I put STAG in number 2, I put Gain in number 3, and so on down, as you can see there. So they were weighted for high yield and bought again in October 2010, or 10 years ago. The cost back then was $108,000, so much less. The yield on the price paid, over 11%, which I think you'll agree is an absolutely stonking yield. And bear in mind, that's the yield on today. So that's what yield you're getting today on the price paid 10 years ago. But how much would they have cost now? So the monthly dividend payout was $1,000 still. The current portfolio value, $166,740. So if you wanted to buy this portfolio today, that's how much you'd have to pay. So if you wanted this portfolio and you wanted to earn $1,000 per month, you need $166,000. If you double that number, you can get $2,000 per month. And remember, these dividend stocks have not stopped their dividend during 2020. They've continued to pay despite lockdowns, despite stay-at-home orders. These companies have carried on paying their dividends. Some of them have actually increased their dividends, okay? And so that's how much money you would need. If you were ever wondering, how much do I need to get $1,000 per month of income? It's on the screen right now, $166,000. And if you're watching this from the UK and you think, well, how much would it be in pounds? Actually, just forget the dollar sign, change it to pounds. If you bought that percentage breakdown in pounds of each of these, that's what it would generate, basically. The capital gain was $58,000, which is 54%. And don't forget, if you want more information about those stocks, check out the full list of dividend stocks that have not stopped their dividends in 2020 video. I'll put that on the screen there now if I can. Also, if you're interested in a stock that used to pay monthly dividends but did suspend its dividends, you might be interested in EPR Properties. The price on that has absolutely fallen through the floor at the moment. I've actually made several videos on that. I'll put a link to one of them there now if you are interested in that, but remember, that's more of a speculation. Anyway, I hope you found this interesting. I hope you found it fun. Thank you so much for watching, and until next time, bye-bye.